Okay, in a previous video, we put together the income statement for Gate City Pool Service. We had the information up top. I've put it down here. Be sure to search for that one if you want to watch that one. Next, we're going to calculate the statement of retained earnings. Now, what I've already done is put in the name of the company, right? And I said it's the statement of retained earnings. The year ended, again for the year, because both the income statement and the statement of retained earnings show the flow of transactions over time. And then we need to put together the items that walk us through beginning retained earnings through ending retained earnings. Well, they told us this was the first year of operation, right? Right up here. Business began January 1st, 2020, and we're putting together the financial statements for 2020. So there was nothing in beginning retained earnings. And the whole purpose of this exercise is for you to figure out and show that how we calculate ending retained earnings is we add net income, which we calculated right there, to beginning retained earnings, and then we subtract any dividends. All right, now, how much were the dividends? Let me slide back up. It says $2,500 were paid, and we're going to assume they were declared and paid during the year. Well, they had to have been declared and paid during the year because it's our first year of existence. We couldn't have declared them in a previous period. So if we wanted to calculate ending retained earnings, we're going to have to subtract the $2,500 from the $4,300, right? And I think that comes out to be $1,800. Put that in here. We'll submit and see how we did. Oh, we made a mistake. I'm going to assume the mistake that they're looking for is just a subtotal value in here. Yep. So they just wanted us to fill in this one subtotal without a heading. Okay. And once we've done that, we've put together the statement of retained earnings. Now, sliding down, we'll prepare the balance sheet as well. So again, this is Gate City Pool. This time it's the balance sheet. But this time we don't say for the year ended because the balance sheet doesn't show the flow of transactions. It just shows the financial position of a company at a certain point in time. So we put the exact date. And then we need to list the assets. Okay? So we're going to go back up here. We're going to say, well, what was our assets? Well, we had cash of $4,500 and accounts receivable of $1,800. Okay? So we're going to put all of those in, right? We probably list cash first. Isn't that $4,500? Accounts receivable, $1,800. That's $1,800, right? What else did we have? Okay, we had office supplies of $15,000, a truck of $14,500. Put in office supplies. Isn't that $15,000? Truck, $14,500. Okay, and that's all our assets. So you can see on the screen we got to 35.8. I just hit enter so the program itself could do the calculation for you. And we've done the asset side of the balance sheet. Okay, next now, in the interest of saving time, what I've done is shown you the liability and stockholders' equity portion of the balance sheet. Now, we know the total liabilities and stockholders' equity have to equal the total assets because the accounting equation always has to stay in balance. Now, you go up to the information that's provided to figure out that we had 1,000 of accounts payable, okay? And we had 33,000 of common stock. Now, where did retained earnings come from? That would be the ending retained earnings balance that we calculated previously when we put together the statement of retained earnings. So once we've done that, our assets equal our liabilities, and we've put together this simple balance sheet.